This is the AM 1570 WILO Party Line, at your side since 1960.
Well, welcome back to Party Line. I'm Larry Glass, and I'm joined now with my co-host Vern Casper and our special guest today, tax attorney and legal analyst Bruce Givner. Good morning.
Yes.
Good morning to you.
Bruce, my name is Vern, V-E-R-N. What can I call you?
Bruce would be fine, Vern.
Okay, that's fine. I'm looking at your picture on the Internet, and you're a Los Angeles attorney, and you're dealing taxes and estate planning and all that sort of good stuff. You know, I was thinking the other day, if tithing is good enough for God, why isn't tithing good enough for the government?
That would be fine with me, Vern. That's just not the law today.
Yeah, tithing, that's 10%.
You're right.
Yeah. Well, let me ask you, if you could change anything in our government, in other words, if you were a benevolent dictator for the next 72 hours, what two things would you change to make this a better world for your great-grandchildren?
Probably provide universal health care provided by the government.
Uh-huh.
You wanted me to answer regarding taxes, and I can't tell you the answer to that. Taxes are too complicated.
Why is that?
It's quite easy by comparison, Vern.
Do you think he's going to get the taxes down to 15%?
I can tell you, and I am absolutely confident of this, Vern, that I have absolutely no idea.
Really? Yeah.
Absolutely.
Why do we make our tax laws so difficult? Why don't we have like the
Because
straightest?
they're all put together by legislators responding to pressure by their constituents.
No, it's actually a quite simple story. If you want the taxes to be simple, then you would do what Vern has provided, courtesy of the Bible, which is you would tithe everyone. And whether it's 10% or 5% or 12%, whatever it would be, you would pick an interest rate, a tax rate that would be fair, simple to everyone.
Yeah,
let's agree that 10% is simple. Okay,
that's what I was thinking. 10%
Right.
across the board. You get no deductions. I mean,
absolutely.
It's just
and let's stipulate that that's simple, and let's assume that everyone agrees that 10% is the right rate. Okay. So now we're a country of fairness, and someone comes along and says, it's really not fair. We shouldn't tax our wounded veterans. And everyone says, you're right. We shouldn't tax our wounded veterans. And so there's an exemption for wounded veterans. And then someone else comes along and says, we really want to provide incentives for potato farmers. And everyone says, you're right. We shouldn't tax our potato farmers. Let's give them a credit for crops or things that support crops for potato farmers. And forget any other 400 examples I can give you. Okay? And that's what happens, that simple is the enemy of fair. And that's what our laws are today. You start with something that is simple, and you add all these things that everybody agrees, and I don't mean everybody, but a majority of the people who voted on them at any given time believe is fair, and that's why our laws are what they are today. And you've got people who think, hey, look, I know how to raise a lot of money. Let's tax every beagle. Anybody who owns a beagle, let's tax them $1 million. What a great idea. And there's 100,000 beagles out there, so if we tax everybody who owns a beagle with $1 million, what does that raise? I can't do the math, Vern. Maybe you can. Let's say that's $10 billion. Well, all of a sudden, you're going to find that everybody labels their beagles Chihuahuas. So I hope that little bit of discussion gives you an insight on our tax laws.
Let me say, do you have any confidence that taxes collected on this year's income will be down in the 15-20% bracket rather than where it's at now?
Yes.
The reason I say that
because the rates that are advertised, and the Republican, bless them, the Republican establishment rails and rails against the advertised rates, which are the maximum rates. So you've got a corporate rate that over $10 million is 34%. If you look at the rates actually paid by the corporations in this country, virtually none of them pay 34% over $10 million. Mm-hmm. You can look these numbers up, and you'll see that on average for the past 10 years, they've paid maybe 22%. Why is that? Because that's what the tax laws average out to when you add in all the incentives. So it's like building up a paper tiger, which is how China characterized the United States over the past 40 years. The advertised tax rates are not what are collected.
Well, it's very important to me that they get these taxes down because I just made a deal, and last Friday deposited in our bank account was $780,000 cash, and of course that's going to be in today's taxes. So it's going to make a big difference to me with $780,000 additional income, whether it's 15% or 45% or whatever, you know.
Well, most people in this country who are privileged enough to be in the advertised 39.6% maximum rate don't pay 39.6% on all of their income.
Well, of course not. I mean, you'd be stupid to do it. Right?
Well, I don't know. Let me say, I'm not in that group. I pay 39.6% on my maximum income.
Well, you know, if you've got money, you probably give it away, and that's deductible.
Well, but that's one of the things Congress wants us to do. And do you want the people who would otherwise pay 39.6% of their maximum income not to give it away to charity? Is that something you want to get rid of, Vern? Are you anti-charity, Vern?
Beg pardon?
Are you anti-charity?
No. It's just the other way around.
So you want to get rid of the charitable deduction, Vern?
Of course not.
Aha. Then you agree that simplicity, the 10% rate that you're arguing in favor of, shouldn't apply, because if you get the 10%, then you're going to have to get rid of the charitable deduction.
Well, you see, you're assuming that, and I haven't gone that far with my thinking.
Yeah, but that's what the economists tell us. You can't get to a 10% rate without dramatically slashing many of the programs, maybe all of the programs.
Well, we don't
unless you get rid of the charitable deduction. Oh, by the way, and the interest deduction for home mortgages.
Well, if you're going to 10%,
it won't raise what we need to pay for the military and most of the other functions of the federal government.
Well, you know, why don't we take care of our own people in the United States, and then if we have any money left over, let's go ahead and give it to Israel, or let's go ahead and give it to Iran.
Vern, the foreign aid that we provide is a drop in the bucket of a $3 trillion federal budget.
I understand that, but why should it even exist?
Say again?
Why should it even exist?
Well, let's eliminate it tomorrow. It's not going to fundamentally change a $3 trillion federal budget. Maybe it drops it to $2.7 trillion. That doesn't get you from our current tax laws to tithing, Vern. By the way, let's go back to something else you said. You said you're making the argument, we're so taxed. Go Google the OECD, the Organization of Economic Cooperation and Development, and look at the top 30 states. The top 30 states in terms of their economic development, and you will see that the United States is squarely in the middle. We're not at the top in our effective tax rates.
Well, how much squandering do we do?
Again, look. If you eliminate the squandering from the federal deficit, Vern, from the federal budget, you're not going to take us down to a rate that's going to allow us to survive on 10%.
Okay, so you're going to be a benevolent dictator for 72 hours. How would you change it?
I'm not smart enough. You need the economists together with the politicians to make those decisions. You're not going to get us down to a federal budget that can survive on 10% tithing and save the most favorite deductions that everybody's going to be in favor of.
Well,
the home interest deduction, charitable deduction.
Let's talk about incentive. How much are we ruining incentive right now?
Well, I'm not sure that the tax system is the vehicle for eliminating incentive. You're talking about welfare, I suspect, when you're going off on that tangent.
Well, you have to have incentive, you know.
Well, okay, give me an idea, Vern. How does the tax system destroy incentive?
Well, if it gets too high, you remember like it was many years ago. You're old enough to know that. My age is 95. I'm 95 years old.
Yes.
I've seen a lot of different
first started practicing, the estate tax rate was in the 77% rate, and the income tax rate was in the 70% rate. Right.
Exactly. Now, am I going to bust my sleep and everything else to make $5 million and give away 70% of it?
There's a little tiny problem with your supposition, Vern. When those rates were what they were, the U.S. was a global colossus creating a very much larger percentage of the global GDP than it does now.
You bet. And now, because of globalization and technology, we are trying to get our arms around globalization and technology, and we're having a hard time doing it because...
Absolutely correct, Vern, but you were citing the tax rate as the problem.
No,
it wasn't the tax rate when it was 70% on individuals and 77% estate tax rate that was stopping the U.S. from being a global colossus.
Well, do you want him to do anything
Don't switch causes, Vern. It wasn't the tax laws.
Well, what do you want him to do on the tax rates?
What do I want who to do? Him? Meaning Trump?
Yeah.
Vern, you asked me, this will be the third time you said if I were a benevolent dictator, and I'm telling you, I'm not smart enough to know that. Have economists get together with the politicians that the people have elected and let them make a benevolently dictatorial decision. I'm just telling you that 10% and eliminating, without eliminating the charitable deduction and the home interest mortgage,
we don't want to do that.
Going to get you there.
We don't want to do that. What about repatriating the money that's made overseas and bringing
it back? That's about $300 million at a 10% repatriation rate, Vern. That gets you about $300 billion. Here's one for you, Vern. The Congress has frozen the budget of the IRS. Everybody hates the IRS. They've frozen the budget of the IRS since 2010 in inflation-adjusted dollars. And now Congress is going to cut it even more, okay? Well, tax fraud in this country, the estimate is $300 to $500 billion a year. And the IRS raises something like $25 for every dollar we spend on it. Here's a brilliant idea. Let's keep cutting the IRS so it can't raise more in tax revenue. Now, there's a genius move by Congress. By the way, we have one of the lowest fraud rates in the world.
The lowest what?
Fraud rates in the world at 15%. In Italy, it's estimated to be that their fraud rate is 80%.
Wow.
Okay? So there's a genius move. Let's keep cutting the incentive for people to honestly report their taxable income instead of putting cash in the drawer. Talk about if I were a benevolent dictator, that's one of the steps I'd take, which is fully fund the IRS. Give them so they pay enough so the people stay with the IRS long enough to get the experience and have enough people to strike down the tax fraud we've got. That'd be an extra $300 to $500 billion a year. That means every single year we'd collect enough additional revenue to equal the one-time repatriation of the 2 to 3 trillion that's overseas.
How can we protect? How can we protect the average Joe Blow who's making, maybe we'll say, $14,000 a year, or $25,000 a year? I mean, the rich will take care of themselves, but what can we do to help the average guy? You know,
the average Joe making $14,000 to $25,000 a year doesn't pay virtually anything in income taxes, Vern. And as a percentage of their income, they pay a tiny percentage. What, 10%? 15%? That's virtually your tithing. They're not the ones paying the huge percentage of their income.
Who's getting hurt most right now?
What's that?
Who is getting hurt most right now? What pay grade?
Well, Vern, if the big corporations are averaging 22% over the past 10 years, that's about the rate that the Ryan plan is trying to reduce the tax rate to. So when you say people are getting hurt, okay, the issue you've got is how low? This is why I said I can't do this. I'm not a benevolent dictator. I'm not competent to be a benevolent dictator. It's choices that the politicians that everyone has elected, plus economists, have to make. How much do you want to cut out of a $3 trillion government? How much do you want to cut out? Do you want to cut a third? You want to cut half? You want to cut out 2/3? Okay, but by the way, eliminating foreign aid isn't going to get you there, Vern. It's not going to get you to 1/3 cut out.
What
okay?
one or two
because
things?
2/3. Think about it, Vern. 2/3 of the federal budget is Medicaid, Medicare, Social Security. That's 2/3 of the federal budget.
Now
so
wait a minute. Wait a minute. You just said something that I take umbrage to, and that is you talked about Social Security. Social Security is an investment I make. It's not a subsidy. It's not a gift from the government. I contribute to it, and
okay,
my
but that's
employer
2/3
contributes to it.
Great,
now,
but Medicare and Social Security, Vern, are 2/3 of the federal budget. So when you say
it shouldn't even be in there because it's our money invested.
But that's what your taxes are paying for, Vern.
Why aren't they just giving us our own money back with interest?
Well, Vern, hey, if you want to cut Social Security, God love you. When you're the benevolent dictator, you eliminate Social Security. Go get them, Vern.
I don't think that's what Vern is saying. I think Vern is saying, I've paid into Social Security since I was 12 years old. So the bottom line is, all the money I've paid in, give it back to me. You can keep the interest, but give me the money that I've put into Social Security and to Medicare.
And that is not a gift. That is something that it was his. He earned it. You stole it from him as a part of the government. You stole it from him.
Vern, well, first of all, I didn't steal from you because I'm not in the government. Second of all, if you want to cut the tax rates, okay, 2/3 of the money raised by taxes go to Social Security and Medicare.
Now, wait a minute. Now, just stop and think of what you said. Why are you putting Social Security in there? That is a deal between me, my employer, and the government, and we contribute to it. Now, just because they had slippery hands on it and stole it from us, I don't want it back as charity. I want my investment back.
Vern, I'm not. If you want to characterize it as stealing, that's up to you. I'm not going to argue with you about that. I'm simply saying we have a $3 trillion federal budget, and 2/3 of it is Social Security and Medicare. If you want to pay for your own Social Security, that's fine.
No,
whatever proposal you have,
you should not put Social Security in that at all. That is a separate banking account that we trusted the government to take care of and get some interest and give it to us back when we needed it.
The problem is the government has had their hand in that till and has taken that money out, and it's no longer there. So therefore the taxes that we're paying are going back in there to pay everybody their Social Security checks. But that money
that's theft. That's theft.
Yeah. Oh, absolutely.
Vern, you can call it theft all you want. All I'm saying is 2/3 of the taxes raised are Social Security. So you can't get rid of
I don't like to
two-thirds
hear
of
you
the taxes.
talk like that.
I'm sorry?
Why aren't you defending it that it's an investment that I made and my employer made and gave it to the government for safekeeping to give it back to me later? And
Vern,
now you're talking
I'm not
about
attacking
it as
or
being
defending
some kind
it.
of a
I'm
charity.
simply saying if you want to cut the tax rates, Vern, you can't get rid of two-thirds of our tax rates.
Okay, well, what's the best way to do it?
What's the best way to what? Cut tax rates?
Well,
The best way to if you want to eliminate one, all you can eliminate, Vern, think about it, is 1/3 of the taxes. That means you eliminate the military. Eliminate it, not cut it. Eliminate it. By the way, President Trump wants to increase it. You have to eliminate the military, eliminate all foreign aid, eliminate anything that is discretionary, eliminate all spending on highways, eliminate the National Institute of Health, eliminate NASA, eliminate every single thing in the federal government except Social Security and military. So if you want to cut taxes, Vern, you have the discretion to eliminate 1/3 of the taxes raised by the federal government. That's it. You're not going to get to a 10% corporate tax rate, Vern.
How come we have such dishonest government?
Hold on. You eliminating fraud and corruption doesn't eliminate 2/3 of the corporate taxes, Vern. So don't switch subjects on me. You've got to understand, 2/3 of the taxes are Social Security and Medicare.
Well, you and I just don't see that. I wish you'd get your damn hands off of my Social Security.
My hands aren't on your Social Security, Vern.
Well, I think he was talking about
taxes, Vern. If you want to cut taxes, you can only cut the federal tax rate by 1/3. That's it. There's no military. There's no border security. There's no ICE. There's no FAA. There's no FDA. There's no SEC. Remember that, Vern, when you talk about cutting taxes.
Larry, what do you think of this?
Well, I agree with you, Vern. The thing is, our money's gone. Our Social Security money, the government has taken it. They were supposed to be putting it in a separate coffer, a separate bank account. It was supposed to be there for us.
Then why in the hell aren't they in jail?
I agree. Because
because the people passed the laws and it's entirely legal. That's why. If you don't like the system, that's fine, but it's not illegal when people pass laws and the people who are in charge with enforcing the laws follow the laws. The United States government passed Social Security.
With friends like the federal government, we sure as hell don't need enemies.
You can't say you like Congress when you voted and you won, and you don't like Congress when you voted for him and you lost.
Well, Roosevelt would be turning over in his grave right now because this is not what he envisioned at all.
How many presidents would be turning over in their grave if they saw who was president now? So you don't always win, okay?
Yeah.
And when you don't like the way it goes, it doesn't make it illegal.
Isn't a nickel's worth the difference between the Republicans and the Democrats?
I'm not a political analyst. You want me to be on your show? I'm happy to talk about taxes. I can't talk to you about politics.
You did mention
not my field.
You mentioned earlier universal health care, though, and I thought that was interesting. You know what? I don't. I would have disagreed with you, but I would agree with you if every one of our congressmen, every one of our political leaders had the same exact health care that they're going to put on the people. And
agree more.
That's the problem. Because the problem is, we can have Obamacare or whatever the care is. Our political leaders are sitting in Washington and they're covered very well because they don't have whatever they're wanting to push on the American people.
That's not true. They now are subject to the Affordable Care Act. Now they are subject to the Affordable Care Act.
And what else are they not subject to?
Can't tell you the answer to that. You're not asking me a tax question. Ask me a tax question, and I'll give you an answer. We can call it Vern Care, by the way.
Yeah, there you go.
You don't like Obamacare? Let's call it Vern Care.
There's enough people cussing me already.
What would you do about the tax rates if you were the benevolent dictator, Vern?
I'd probably
would you
go
eliminate
to
the deduction for home interest mortgage?
I'm not that smart.
Okay. Would you eliminate the charitable deduction, Vern?
Absolutely not.
There you go. Well, that blows your tithing out the water, Vern.
That's what makes local financing healthy.
But I would.
Vern, wait a minute, Vern. Would you eliminate the deduction for state and local taxes? That's one of the biggest issues today. Would you eliminate that when you pay taxes to the state of Indiana that you get a deduction for federal purposes? That is probably the most controversial deduction that there is today. Would you eliminate that?
I don't know. I haven't given that much thought. What's your take on it?
Well, I live in California, so you can guess my answer.
I sort of like, I've always sort of liked the straight across the board tax, whatever percentage it is, and getting rid of all the deductions. And the reason why, is this, is that
simple.
Everybody, well, not just the simplicity of it, everybody has ownership in this country. Everybody, whether you're a multimillionaire and you're paying 10%, and I don't know that 10% is the number, or whether you're making $5,000 a year and paying 10%, you have ownership in this country. Then you have ownership in our military. You have ownership in everything that this country is doing, and I believe that ownership would make people more responsible.
Terrific philosophy. Here's two questions for you on that terrific philosophy. Number one, so you're going to eliminate the ability of the state of Indiana to raise money by issuing tax-free bonds, right?
Well, I've got quite a few of them, yes.
So you're going to eliminate the ability to issue tax-free bonds, right?
No, because when I'm talking across the board taxes, I'm talking federal.
Nope. If you're going to eliminate the issue of the state of so you're going to allow the state of Indiana to issue state tax-free bonds, right? But the income on the muni bonds issued by the state of Indiana will not be free of federal taxes. Is that what you're saying?
Yeah.
Okay, well that at least is consistent with your across-the-board tax rate. That makes sense. Okay, so next question. You've got someone making $10,000 a year.
Mm-hmm.
They are clearly far below the federal poverty line, right?
Yes.
You're going to have that person write a check for $1,000.
Exactly.
Okay, good. You are entirely being consistent.
Because then they have ownership.
Okay,
because if they don't have ownership, they don't care.
Not a problem. And you're going to eliminate the FDA, the SEC, the FTC, the military, the Border Patrol, and every other federal
the thing is, I don't know
including Congress.
I don't know that 10% is the number. But when you have somebody making $150 million in profit a year, or they're making $150 million a year, and they're paying $15 million of that, then I think, because you can't tell me a person making $150 million today is paying $15 million in taxes. Because of all the write-offs, they may be paying $2 million in taxes. But when you get that $15 million from them instead of $2 million, then it's going to make up a lot of that difference.
Yeah, I definitely can't tell you that they're paid $15 million. I don't know. It's an individual by individual case, but they may well be all in muni bonds.
Yeah. I mean, you may have multi-millionaires that are paying almost nothing in taxes. So
that could be good, couldn't it?
What, that they're not paying, or that they will be paying 10%?
Now, wait a minute. If a person is doing that, he probably is setting an awful lot of people up with salaries, so the IRS can come in and clip them off.
But wasn't it Buffett that said that his secretary pays more in taxes than he does? That's not right. That's not right.
Couldn't agree more.
So if Buffett paid his fair share in taxes, if he paid his 10% or whatever that number is that would pay for all these things in the U.S., then that's a big problem when he's not paying taxes and his secretary is.
Okay, Bruce, what advice do you have for the taxpayer that gets, say, from $35,000 a year to $100,000 a year. What's your advice to them?
Get a really good CPA, lots of experience.
Okay. Well, what are they doing wrong, or what are they doing right?
It's hard to do that in a general basis, Vern, because tax planning is so individually specific. If the person making that money has a business, then they're the best income tax planning in the Internal Revenue Code. When I say the best, I mean the biggest and the safest, is that which you can get as a business. Probably the safest, the biggest, the best is to have a defined benefit pension plan sponsored by your business. Congress gives terrific tax incentives to set up a pension plan to provide for your retirement. That's the safest. That's probably the biggest. So let's say the person was making $100,000, which would otherwise be taxable income in the closely held business. Let's say the person only needed $50,000 to maintain the family standard of living. Okay, let's say the person was 50 years old. They can probably put the entire $50,000 profit that they don't need into the defined benefit pension plan. Depending on the number of employees, they'll have to cover the rank and file employees.
You're talking exactly like I think. When I was a boy, single, I saved 50% of every check I had. I'd take it to the postal savings, because in those days you banked at the post office more than you banked at a bank. So I took my check to the post office, and they would give me half of it back, and I would spend it. I accumulated that money. Then I invested it in various things, and it grew up with the interest, et cetera, et cetera. So I think you have to start your retirement planning as early as possible, even in your teens before you're married. What's your take on that?
I think every economist or financial planner would give the same advice that you've given, Vern.
Yeah. Well, it's very important to do that, because I have done that successfully, and I always call it dumb luck, because I'm not a particularly bright guy, but I grew up under the Depression, and boy, I tell you learn a lot going through a 1930s Depression,
Well, people should have learned that growing up through 2008 to 2014.
Mm-hmm.
Yeah, but the other one was much longer. And
Of course.
So how do you stay out of the IRS crosshairs? Would it be consistency in your tax returns? Would it be, what causes a person to get audited?
Well, okay, there's a certain number of audits that are simply fortuitous, or should I say random. The IRS randomly audits a certain number of returns just to gather information. So some audits have nothing to do with what you did. Mm-hmm. They're just to gather information. But in answer to your general question, what's the best thing? Follow the law. Mm-hmm. Do the right thing. And back to my first advice, which is get a competent CPA. By the way, I'm not trying to argue against very heavily advertised services like H&R Block. I'm sure that you can get good filing advice from a firm like that also, but it may be more catch as catch can, depends on who you get at that business.
Let me say this. There is something here that the average person doesn't really realize. Let me give you an example. I had a regular audit, it's been many, many years ago, and they didn't find anything. It was one of those random audits and all. And I gave him an office, and he was there for about a week, and it came Friday, and I knew he wanted to wrap it up, so he said he was about through. And I says, okay, have you got everything down? Have you decided what you're going to do? And he says, yeah. He says, you're in pretty good shape. I said, okay, I'm going to say something to you, Mr. Tax Collector, and I don't want you to take it out on me because I told you. You and I have a lot in common. You want to collect taxes. I provide jobs, and I set up 15, 20, 30, 40, 50 people with salaries that you can come in and clip them off. And aren't we partners? You as an IRS guy, and me as a guy that finishes jobs. Aren't we partners in this business? What do you think of that? And he looked at me and he said, well, a lot of people don't think of that way. So whenever we talk about the rich, to hell with the rich, these people are probably creating a lot of jobs that the IRS go in and takes money away from. And if they weren't doing that, there wouldn't be anybody for the IRS agents to go in and collect from. And I don't think we give enough credit to those people who are rich because they do create jobs. Do I make any sense?
Well, I think you make sense in this respect, which is that people don't treat the IRS with proper respect. The individual employee of the IRS is almost always, in my experience of 38 years, a nice person, a smart person, and someone to be treated with respect. And the failure to do that is just, first of all, discourteous and not good policy. I treat the IRS people with whom I am privileged to interact with the highest respect, and I find that they treat me in the same fashion. So I think it's a big mistake to treat the IRS as the enemy. If there's a dispute with the IRS over a fact or a legal theory, the IRS is not what it is advertised to be, which is the most feared collector in the country. You can always reach a reasonable decision with the IRS if you know what you're doing.
Well,
by contrast, in the state of California, I can tell you that the Franchise Tax Board is not that cooperative. And if you want to know, Vern, I'll tell you exactly why it is that you can always reach a reasonable accommodation with the IRS. Would you like to understand why that is?
Yes.
Okay. At the bottom of the federal tax system is an audit, okay, the auditor. At the top of the IRS system, there is the federal tax court. There are 19 judges for 330 million people. Did you know that? There's
not very
19
many.
tax court judges. The key thing is between the IRS auditor and the federal tax court, there is a division which we refer to as nirvana, and that is the IRS appeals division. Here's the key fact, however. The key fact is, if you get in a dispute with the IRS, you can have your day in court, listen carefully, without paying the tax. So the mission of IRS appeals is to keep you from going to court. Now, in other words, you filed to go to court, but they want to keep you from trying your case. And what they do is they settle 90% of the 40 to 50,000 cases that are filed in tax court every year. So if you dispute the IRS, you're proper. What you're supposed to do is not agree to go from audit to appeals, but to file your petition in court and then go to appeals. And when you get to appeals, this is borrowed from The Godfather, but doesn't have the same import. The IRS appeals officer will make you an offer that you cannot refuse. The reason why you can't refuse is because the offer is going to be so good, you can't afford to litigate in tax court. And they settled 90% of the cases every year. If they did not, the federal tax system would crumble to a halt. As it is, Vern, if you read a case decided right now, 2017, you can read a case that's decided in 2017, the year involved, the audit year involved, will be 2007, 8, or 9. So the federal tax system is barely standing up, as it is right now, with the appeals office settling 90% of the cases. So that's why you can always reach a reasonable deal with the IRS. If you have any strength to your case at all, they will make you a deal that you should virtually all the time accept.
Uh-huh. You know, another thing that I'm a firm believer in is get an accountant or a consultant like yourself, and they can guide you through it without getting in a lot of potholes, right?
Yep. I said to you, the most important thing for a taxpayer is to have a really competent CPA. Get a recommendation from a friend, a business colleague, a relative of an experienced, smart CPA.
So tell us your thoughts on Trump's taxes. Should he release them? Should he not release them? What are your thoughts on all that?
I think I speak for the majority of the American people, which is he should follow the custom set by prior presidential candidates, let alone presidents, and release his taxes.
Yeah. When you said custom, because it's not a requirement, right?
That's absolutely correct. It is not a requirement.
Uh-huh. What are two of the major mistakes that people make that get them in trouble?
Not reporting all their income. In other words, committing tax fraud. That would be one. And number two,
lying to the people.
Yep, and the other one is the other form of lying, which is overstating their deductions. They go out to dinner with their family and they treat it as a business expense. Those are the two major mistakes. Lying.
Mm-hmm. Mm-hmm.
I call that cheating.
Well, lying, cheating, synonyms to me.
Yeah.
Yep. Well, that's fascinating. How long have you been in this business?
38 years, Vern.
Can you give us any illustrations that we might be interested in that you've been involved in?
Sure. I had a client recently, not too recently, but I had a client who was in the landscape business. Doing very well, probably making $1.5 million a year. A lot of his employees were illegal immigrants.
Right.
And so the nature of their work here in the U.S. was they didn't have Social Security numbers. So this really smart fella is paying these employees in cash because they don't have Social Security numbers. So let's say the number is $400,000 a year that he's paying in cash. And he figures, well, look, I can't deduct it because I'm paying in cash. So how about if I don't report an equal amount, $400,000 a year, in taxable income? It's sort of fair, right? Can't deduct it. Why should I report it? We have no idea how that got to the Criminal Investigation Division of the IRS. You almost never know how it does. So happily, I say, he got convicted of tax fraud. $400,000 a year for 5 years, That's a pattern. When you hear the word pattern, to whether it's non-reporting of gross income or overstating your deductions, the word pattern leads to the word that starts with a C, criminal. And it's just something you want to avoid. Now, the criminal resources of the IRS are the most valuable resource the IRS has. It's more valuable than platinum. They start 4,000 indictments a year, and about 2,500 people go to jail every year. So they don't waste it on someone who's, stealing $10,000 unless that person is the mayor of your town or that person is Matt Damon. So they have to reserve those small amounts for people who give them advertising value. Mm. So, unfortunately, and I do mean unfortunately, they don't have the ability to indict 50,000 people a year. I wish the IRS had that ability. But
what are some frequent questions you get from the public?
How do I pay less on the $10 million capital gain I have this year? How do I pay less on the $2 to $5 million of ordinary income I will have this year? How do I not pay? How do my children not pay estate tax on my $50 million estate? How do I protect my assets in case I get sued by a creditor? Those are the issues.
I'm looking at some of your recent publications. One of them that caught my interest was IRS tackles 4-time Super Bowl champion for a $5 million loss. What is that about?
Right.
That's a publication? That's something that you wrote? And
yes.
Okay.
I don't remember it exactly. I believe that was a guy who got into a deduction program that was simply phony. Mm. In the old days goes back to the 1980s and 1990s, There were a lot of tax shelter promoters who would set stuff up like the old cattle breeding programs. Oh, God, were those something. They would get these allegedly super heifers that were super breeders, and they would spend $10,000 on this heifer because the heifer could produce lots of, I'm making it up because I don't know what the gallonage is, 10,000 gallon a month bovines, and of course it was crap. And so they had these big deductions because they were buying these super heifers, and it was just fraud. So there was lots of people in those kinds of shelters back in the 80s. Happily, Congress eliminated a lot of those with Section 469 in 1986. But there's still all sorts. I mean, today you can still see these historic building credits, these conservation easement credits, and a lot of them are just crap also. And the IRS strikes them down, and they disallow millions of dollars of deductions. There was just a big law firm in Los Angeles that was deducting millions of dollars of use of their private plane every year. And the IRS went after that. And you see lots and lots still. I mean, these things are crazy.
But you're talking a law firm there. They should know better.
Yep, a big-time law firm where lawyers are making millions of dollars a year.
Wow.
You still see very commonly, I mean, these cases come up all the time. People deducting their yachts as a business. People deducting their horses as a business. Just absolute garbage. Comes up all the time. I could write an article about one of those cases every month.
Yeah, Bruce, time's coming to an end here on our program, but what are two things that you would like to leave our audience with? In other words, do's or don'ts, something like that. And, of course, we're average out here in flyover country. So what are two things you'd like to leave them thinking about that maybe could pay off?
And have you written any books that we could promote?
Well, first of all, Vern, let me say that I'm born and raised in flyover country. Lorain County, Ohio, is not very far from Clinton County, where you're located. Okay,
you got that right.
Number one, no, I don't. I mean, the books I write are for California CPA Society and the California Bar Association. I don't think your readers are going to have a whole lot of interest in that.
Okay.
But just something I said before. The best thing is to have a very experienced, competent CPA recommended by a friend, business colleague, or relative. Nothing is more important than a competent CPA. I'm a tax lawyer. People don't get to me unless they are recommended through that CPA or another lawyer. People don't come to me directly. They get recommended by a lawyer or a CPA. That's the most important piece of advice I can give you. The other thing would be, as a citizen, follow politics. Follow the tax law. Then you can make an intelligent decision when you go to the ballot box. As a citizen, you should have a philosophy about what you think is appropriate. Do you like the deductions? Do you like the tax rates? It's simple versus fairness.
Yeah, I'm getting from your conversation that you think the IRS is pretty fair once you do get into a problem, and they'll listen to you and probably end up making a compromise, right?
Yep. If you have a competent representative who knows how to deal with the IRS, when you have taxpayers dealing with the IRS, they sometimes get angry, and boy, is that unhelpful.
Yeah. Okay. Well, I'm going to have to. I own 4 radio stations in St. Louis, Missouri, and I've got a session in a few minutes down there co-hosting that program, and I'll have a House of Representatives on, and I want to go over some of the things that are happening in the House and the taxes and this sort of thing. But it's been a pleasure talking to you, Bruce. It really has, and I know you do a lot of good. And boy, you need specialists, whether it's a health matter or a tax matter or whatever.
Pleasure talking to you, Vern. Pleasure talking to you, Larry. Have a lovely afternoon.
Yeah, I would like to add one other thing right before you leave is don't be afraid of the IRS. I mean, I've talked to the IRS several times on my own, just went in and talked to them. They've been really, really friendly to me. So I've never had a problem with them. So, well, hey.
Couldn't agree more.
Okay.
Don't have a bad attitude.
Okay. Well, hey, thank you so much for joining us today.
You guys have a lovely afternoon. Take care.